Okay, hello everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. Michael Boutros here with you guys. Good morning. Today is Thursday, May 21st. Great to see you guys in the room. Mark, Stefan, Eileen, good morning to you all. Stefan will definitely take a look at sterling cross. So on the sterling yen, obviously, Stefan has a question here. Says approaching the 190 level. Yeah, listen, we got really strong retail sales data out of the UK. We were expecting 0.2. We got 1.2. So certainly the picture there much brighter than expected. Remember last month we got an unexpected contraction. So certainly that data prompting the sterling crosses, guys, right through the highs, and specifically on sterling yen, sterling cat too, Stefan. We've broken those levels, so the top side bias is in play. We'll take a look at those in a little bit. As long as Eileen is looking at the euro, saying is that a long trigger? On the 5-minute chart, here's the 5-minute chart on the euro looks like. I wouldn't necessarily, it's a trigger. It's a trigger, but where we are, remember, London highs are just above, so 157 is still going to be the London high. This is for the sterling. On the euro near term, that does look like a trigger off the 5-minute. Absolutely, yeah, with a 40 hold in momentum. So just keep that in mind there on the euro. Again, we've been looking for the rebound in the euro. I will go over the euro in a moment. I actually did have a long in play yesterday on FOMC. We locked off a quarter of it at 40 pips, just a quarter of the trade. And then the rest went to break even. And on this spike last night, I got stopped out before the rally again. So a little frustrated on that. But, yesterday's exits don't show on the charts, guys. So we did take a chunk off, but 3/4 of the trade got stopped out at break even. There was another trigger in overnight that gave out here during European hours on the open of Euro trade. And that would have put you back on the long side again. So the 40 hold of momentum with the trigger break does look like you could get a bounce here. Just be cautious of where you are in time. Obviously, we got the PMI numbers a little bit mixed from Europe in overnight trade. The composite was the only one that was a little bit weaker than expected. We did see services, manufacturing a little bit above estimates. So the data is not really going to do it here for the euro dollar today. Tomorrow's data is going to be paramount, guys. We're going into obviously the inflation report for the United States. We know that the Fed is specifically looking at inflation now that the employment picture is looking a little bit more on target. So we'll certainly be looking at that in tomorrow's trade at 8:30. So we'll have to see how this looks here, Eileen. I'm not really going to do anything right ahead of the open here. Again, it's just opening up the U.S. opening range from the 8:30, 9:30 slot. So we'll see if we can put in those high lows. We'll go over the euro in just a moment. First things first, here's what the dollar looks like, guys, to open up the session. Relative performance so far looks like this. So you got the dollar strong against most of its major counterparts. Kiwi and CAD sort of bucking the trend here, a little bit lower. Or Kiwi and CAD, excuse me, are the ones that are weaker against the dollar today. We do have a sterling with a nice rally of 0.92%. Swissy euro up 0.3%. Yen has been lackluster, remains so. And the Aussie is another trade that we've been watching. It's the first trade on the intraday scalp we'll go over today. It's struggling. It's struggling to make any kind of move. So here's what we're looking at yesterday with the Aussie on the scale chart. Still could see that drop into 78.47, and this is really, the ideal support barrier we'd be looking for. You're looking for that swing high from April. You're looking for a 50% retracement, basic 50% retracement of the range. You also had a sliding parallel right here off the median line, which came right into that region. It's been, again, real lackluster to try to get this thing going. Yesterday we turned right ahead of target at 78.47. Again, the same level. Here's what the Aussie looks like now. Before we jump into that even, sorry guys, the dollar index. Expected resistance, offering just that. So we talked about this upper median line parallel. We talked about the fact that the 100-day moving average was there, the 2009 highs. We stretched right into that pocket yesterday on FOMC. The high was 11,850, okay, which was the exact 11,854 is the exact 2009 high before pulling off. And on a closed basis, guys, it doesn't get much closer than that. All right. So near-term resistance for the dollar being respected, momentum turning ahead of 50. We can't call the breakout just yet, and it looks like while within this formation, we still want to look lower. No change, right? Now again, you can see a scenario where tomorrow's inflation data really charges some volatility here, maybe a spike into the highs or a spike into the lows. But as it stands right now, that region still the near-term bearish invalidation level. All right, a topside break, and you're essentially looking for 11,990 or 11,900, 11,898. The 50% retracement. You have the exact opening range high for the month. Okay, and that would be the scenario of a breakout, not the base case scenario. We're looking lower, but that's the breakout scenario for the greenback. All right, near-term support is going to be right down here, same exact level we were talking about to start off the week that invalidated the short side, 11,737, basic 236, lows from February swings, and the April low. So now that we have a picture of what the dollar is doing, we went into the Fed yesterday saying, watch this resistance level. The Fed charged a nice rally right into the resistance, came right off, and it's sort of been a textbook play ever since. So here's the dollar index. Again, for those of you who are new to the room, there's a camera button in the top right-hand corner. I think it's on the right or left of your GoToWebinar screen that you can click on to take a freeze frame of any of the charts that you see presented for the webinars on SB. See some great questions. By the way, feel free to throw out any trade setups or questions that you guys have. Specifically, if you're new here, guys, we want to hear from you. Feel free. So let's jump into the Aussie dollar scalp. Here's what the Aussie looks like on the daily chart first. Let's get a quick picture of where we are. Yesterday in the report, I did note also real quick, guys, that that was the 5th consecutive down day for the Aussie within the context of this ascending formation here. You haven't seen that too many times. The last couple of times you did see that, you did see a small reprieve, the first of which was right down here at the yearly low. Not the best representative example because that trade session on the 9th was essentially a doji. It was lower on the day, but it was essentially a doji. But long story short, that charged the low. Obviously, we haven't seen those levels again. We saw a nice little recovery there off that move. Beyond that, last day we saw a 5-day stretch was right here. And that just saw a quick 3-day blip of a rally that paired the 618 of the entire decline. Okay, so some things to keep in mind there. This one charged a recovery of the entire decline. This one charged a recovery of 618 of the decline. When's the last time we saw it beyond that? You got to go back a while. And that would be, sorry about that, right here. And again, this one charged a nice ascent or a nice rebound that recovered 786 retracement of the entire decline. And again, these are just drills that we do to kind of get a gauge of what we could be expecting from the market moving forward, right? Now that we've seen these technical phenomenons sort of pan out, charged a whole 786. So the last couple of times we saw, 5-day decline, we expect to see some upside, nothing too dramatic, 618 retracement on one of them and 2 full retracements on the other, but those were in the context of a broader downtrend. And that's the difference here. Here we're not really in that, okay? Since the low that we made for the year back in April, we've been moving higher. I don't think anyone's going to argue with me on that. Are we putting in some sort of high? Could be. You did get some divergence on those last 2 peaks for April and May. But the long story is you're still at support at this point. And 78.47 is sort of the barrier of which we're going to invalidate the long side if we break lower. All right? So on account of a couple of different things, should be expecting some sort of near-term bounce maybe. Again, don't rule out the possibility of a run in the open of U.S. trade to tag that 78.47 key support zone could be the play, and then a rebound off it, which is why I'm not too keen necessarily right now on jumping into any trades as we open up the session. I kind of want to see how the opening range looks, but that's the game plan. Those are the key levels here on the daily chart for the Aussie. Where are we in the 30-minute? That's the interesting part. So we've been trying to turn. There it is. We looked at that sliding parallel last night. We broke above it. We've been sort of sitting at it as support right now with another attempted break to the downside. So this is that key support region that we just discussed. All right, right into 78.47. I think that's where we should be looking for near-term support here on the Aussie. If you get a nice setup here for the opening range of New York and you get the break, I'm not too against trying to press a short into this region, but as for me personally, I'm not really interested. I'm just going to sit on the sidelines here. If we get the dip into 78.47, 78.40, 78.50, this region right here, I'll be more inclined to try to see if we can get any long triggers on the exposure to the top side. If we zoom out on this chart real quick, guys, just to give you reference, again, this is the operative pitchfork that we're in, right? And this is just the same sliding parallel, the same slope connected to those highs that you made on the swing back in, I guess that's March 16th. You saw a reversal here on April 9th. You saw it catch a low here on April 17th. Obviously caught the opening range low for May. And it coincides right now exactly with that 50% retracement. Okay, add to that you've had this, pitchfork formation. It's getting a little messy on the upper slopes here, I understand, but again, it's been in play for 4 or 5 days now, and the upper median line parallel once again coincides on that same region. Other than that, all the levels cited in the report are still live, guys. So basically what we would need to see to mark or shift the focus back to the top side would be a break above 79.20. Okay? That's not just a 38.2. It's obviously been a pretty decent pivot in price. If you go back here, you can see the stretch lows. I think this was the FOMC low here. It obviously had a nice pivot right there in that same week. And again, that comes in at 79.20, just above the New York highs that we made yesterday. So this is going to be the invalidation zone and puts into play the recovery. In such a scenario, guys, you just want to tack on a basic retracement and play those topside targets, okay? They should be dead on if we have our levels right with some of the levels that we've been watching. Just as a drill, we don't know that this is the low. I'm just doing this for example purposes. You can see those ranges start to come in exactly sort of at the levels that we're looking at already. Okay, and again, if this stretches down into this region, right? Look how those levels map out perfectly. 79.67 comes in on our 79.65 target. The 50% catches that high exactly at the 80 handle. So we don't want to set too much of a firm expectation, but the ideal scenario here would be a drop deeper so we can try to get back on the long side here for a little bit of a bounce for Aussie. Questions on Aussie? As far as data is concerned from Australia, you're pretty quiet till the end of the week. There's really nothing on tap until we head into next week. You get some private sector credit, which is going to be iffy, and then construction work and the Westpac leading index. So there's really nothing much on tap for Aussie dollar. All right, moving right along. Let's jump into the euro because it seems like that's on the move right now. So here's what's going on with euro dollar. This is what we looked like last night. On the daily chart, before we move forward, I just want to show you this region. This is the same region we've been talking about for since the start of the month. It's the opening range low. Okay, so here's what the euro dollar daily chart looks like. Let me zoom this in a little bit. Oops. All right, so 1095, 1094 is going to be a 100% extension off the highs. Been a major region that we've been watching for a couple of months. Caught the lows for January. It was the opening range break for March. And obviously, since the start of the month, we've probed below it a little bit. But long story short, on a closed basis, it's still been major support. We bounced right off it yesterday. It was a third consecutive bounce that we've seen this month. Here's the open for May. Here's your May low right into the median line. We pressed that confluence there. It was a really nice sharp snapback. Again, the median line held. Okay. Also, I want to bring to your attention real quick, I showed you this yesterday. This gray line here is a former lower median line parallel for this larger formation off the highs from that swing high back in 2011. Nice pivot there. That's also on that region right now. Okay, and then yesterday's decline obviously probed below. We closed right there, and here we are seeing a bounce. So this is sort of near-term support. A break lower opens up 109.93, basically the 110 handle, and I think this is going to be a lot more of a critical support. You have the lower median line parallel here for the operative formation that we're in, and that coincides dead on, again, with a 50% retracement. So the levels are pretty clear. It's just that we're testing key near-term support, and this was the reason that we were looking higher. It's because we couldn't break below this yesterday. So here's what we look like on the scalp. So see, Eileen, that same range just broke to the downside. We really got to be mindful of where we are in time. Okay, and remember the triggers that we were looking at. Let me bring that 5-minute chart back. The triggers that we were looking at. Remember, guys, the trigger is only based on the close price. So do you see how that just happened? At the start of the webinar, this thing looked like it was breaking to the upside, and Eileen was saying, hey, Mike, does that look like a top side trigger? And it did. But guess what? We can't make any assumptions until that candle closes, right? And look at the momentum indicator now. It looks like it never even made that break. So we got to make sure we're sticking to our convictions and the strategy, right? We got to stay disciplined here. And it's best off for us to wait out the opening range if you're not already short. There was a trigger here, Eileen, that would have been the operative one that would have had you in the trade already. And that's a trigger I would have looked at. Very, very compelling. Why? Divergence into the highs, followed by a trigger break. 9 times out of 10. I say this every day. I will take those trades. Okay, this is just way early for me. This is on the ferry ride to the city here. So, but it was a clear trigger. That one gives you a better trade, Eileen, because you have a stop, and the stop is against the session high. Divergence, trigger break, stop against the session high puts you well within the 36 pip range that we're looking for. Really clean. Here, you've already made a big pullback. Momentum is testing 40. Yes, the 40 break here, if we close below, does reinforce a downside play again, specifically after holding 60 resistance. But where's your stop? Yeah, you can put it against the swing opening high for New York Open, but guess what? We're just 15 minutes into New York Open. So I have no conviction on this being a major high. Eileen, does that make sense? Does the thought process there make sense? A couple of things you were overlooking there on that. Says, yes, timing is huge, and yes, it makes sense. Right on, Eileen. Appreciate that. All right, so here's what we look at the 30-minute. So this is yesterday's scalp chart. Again, we did get that consolidation break to the downside. Tried to break. We couldn't really even make a 30-minute candle close below 110.94. Again, remember on the daily chart, that's the key support structure we were looking at. And momentum bounced right ahead of 40, right back into the 60 range. There's no scalps for us necessarily here, guys. And a lot of these setups, you're going to see the levels start to play out. We want to cherry pick the ones that are going to be the best in our favor. And how does that decision get made? A, where are you relative to your stop? And B, where are you in time? Okay, are you closing out a session? Are you heading into the European close? Intraday for the U.S. trade session, guys, my best plays have been right on the close of Europe. Either the market makes a stretch into the U.S. opening range and then Europe closes and you see that paired, you fade that move, or as the market fades that move, Europe closes 11:30 heading into 12. That last move there allows you to get back into the position. So the crossovers for me have been the best plays for the sessions, rather, from a timing standpoint. But I'm still wary of taking any short exposure on the euro as we hold this support. Okay. Remember, it's a little bit of a different play from the Aussie because this has only had a 3-day pullback. We're not talking about an extended 5-day decline into a major support yet. For me, that would be this region here. Topside resistance still going to be, and the invalidation level for the short side still going to be right in that 112.50 range. Basically looking at that sliding parallel off the highs from December and the median line off below. Okay, if we get back through this, right back on the long side. Other than that, could be looking for a dip into 109.9, basically the 110 handle. One other thing I do want to note is on the momentum signature here, guys, as we head into the U.S. session, if we break 40, it would reaffirm the downside. Why? Because this is the highest spike we've made in momentum since the start of the week. Here's the weekly open, right? Momentum held 60. We've had multiple 40 breaks, multiple 40s resistance. That's when you have a real strong downtrend, and that's where we made our low. On the upswing, failure to hold 60. If we break back below 40, it just reinforces the downside. So another play that we could be looking at, or another possibility that we could be looking at to the U.S. trade session, is if this stretches into the low again, momentum holds 40, and then you get a trigger break to the upside. That's actually a nice long scalp. All right, it's all about proximity to where you are as far as your stop is concerned. When we're taking such a high volume amount of trades, guys, in an intraday strategy like this, your entries are paramount, okay? Even more than where you're looking to get out. It's all about the entries. When you execute the proper entry, that allows us to fade out at the levels that we've designated. Also, it's about your risk reward, right? So that first entry, we're obviously coming into the trade with a little bit more volume behind us. And on that initial entry, you want to make sure that your stop loss makes sense relative to what you're looking to make per trade. And on our scalp strategy, we're typically looking for a quarter of what the daily ATR is saying. So another scenario here for a possible position on the euro as we open up US trade. Questions? Mike, what's your reference points for that 100% extension on the daily chart? So this is not an extension, my man. Good question, actually. Eileen, I think you had a question yesterday also on fibs, where I take them from. Guys, a lot of the times, I just want you to stress the level. A lot of the times I don't have the fibs, actually. I just leave the level as a low. So this is the May opening range low. It's not even a retracement or an extension. It's just the simple May opening range low. Steven, does that make sense? Oh, you're talking about the daily chart. I'm sorry. So this one, yeah, this comes right off the highs. So this is a 2011 high. And I can make that easily identifiable for you by just not extending it. Boom, right here. So you're probably thinking to yourself, well, Mike, why didn't you use this high, or why didn't you use this high? Again, we're looking for the last operative clear leg. And not only that, guys, it's very important that when you draw your fibs, you're not blindly following the fib. And what I mean by that is this. If you draw an extension or if you draw a retracement and the market simply sails through on the way up, on the way down, doesn't even respect the level, it's not there, I'm not going to be stubborn and sit there and continue to respect that level and target it. If the market doesn't show us a reaction to that level, if there's not at least a pause in the decline or a rebound, then it's pointless for me to look at it. But if you look at this extension, since the high that you made, the 100 and the 618 have offered really nice levels. In fact, this was the break that charged the major decline into the start of this year, right? We rebounded right ahead of it. We sat there, offered resistance for 4 days before finally collapsing. So I know 120.43, the 100% extension here, or the 618 at 22 was something significant. What about the 1618 that we just looked at? Well, that actually, or the 100% rather that we looked at, that at 1094 actually caught the swing low right there for the January opening range. And again in March, it was the break on the third or the fourth here that charged the decline into the yearly low. So I know that that 1094 is important now. And here we are yet again. So does that make sense, Stephen? It is a longer dated extension, no doubt about it. And I typically, on the way up, won't continue to really use those extensions as aggressively as we are right now, but the market is continuing to react there. So I'll continue to watch it. Hope that helps, Stephen. Eileen says, thanks for me, fib discussion. Yes, makes more sense. Right on. Awesome. He says, yeah, and Stephen says, yes, thanks. I was trying to find it. Yeah, no worries, man. It's a longer dated one. And again, it's just continue to offer some nice pivots in price. So that's one of those levels that we're still watching. And on a closed basis, it's been pretty radical. Itis, good to see you in the room, sir, says, hi, Michael. Hope you're doing well. I'm doing awesome. One thing to ask you, how to process the info from the charts you're posting. Is there any shortcut for your entries? I'm not sure about the question there for the shortcut for your entries. We're looking for momentum triggers, and we're watching price action for the actual entries on the trade, Itis. So one thing I want to say is this. As far as the charts are concerned on the intraday, the thing that matters are the levels and the invalidation levels. So these targets are levels that'll change something. So for example, you see here it says in the report, look for a resolution to this near-term consolidation formation with a breach above the high or the highlighted region, the ML right here, the bearish invalidation level, targeting 112.15 and the upside targets. So you know that heading into this region, that's going to be the region of resistance that you need to break through for us to favor the top side. Other than that, you're still in a downsloping trade, right? So as that's concerned, oops, sorry about that. As that's concerned, we're still bearish. This is the bearish invalidation level. So as you come into this region, you're looking for short triggers, and that's exactly what you got. The momentum, the trade came right into that highlighted region. We broke to the top side of this, and then it just collapsed. And that's exactly what we're seeing right now. So if we had broken higher, now we're looking to buy bounces into 112.15, buy bounces into 112.68, 112.70. Okay. Other than that, we're looking for short triggers below this region. Does that make sense? So the targets are for the near term intraday type of plays. A break below 110.65, okay, which is the low that we made. Like I said, for the May open, you're looking for 109.92. A breach above the invalidation level, you're looking at buy pullbacks into 112.15, into 112.60.70. And Ida says, yes, it does now. Thanks for the clarification. Really appreciate it. Hey, cheers. Guys, there's no question there's no question that you should be scared to ask, so feel free. Any other questions that you have on the charts or anything from me and Jamie. By the way, keep in mind, Jamie's on tap today at 1 o'clock. He's got some great stuff for you. I don't know if you guys saw the homepage yesterday. He did publish a piece on the sterling yen, which we will look at. I love it. The broader sterling yen trade, for those of you who've been following me, has been my trade of the year on daily FX. And I think there's a lot of upside still potential. So if you haven't taken a look at that chart, definitely take a quick gander. So euro dollar. Any questions on euro? Feel free to throw them out. We're still at risk for a move higher while above 110.95. This region here. The broader downside bias. Again, the invalidation level hasn't changed. We really need to clear that highlighted region. Again, we'll move that to the side here as we move into the U.S. trade session. All right, moving right along. Kiwi dollar. So we covered the Aussie, we covered the euro. Let's do the Kiwi, and then we'll jump in some of the sterling crosses and have some fun on that stuff. So here's what Kiwi dollar looked like yesterday on the daily chart. 786 retracement caught catching the lows. 786s, again, on the calm currencies tend to work pretty well. I'm not really crazy about 786 catching the entire low of the move, but you're getting some divergence in momentum, and the thing was kind of looking kind of hairy as you saw that stretch yesterday come right into that region and hold. Here's what Kiwi looks like on the daily right now. Okay, real lackluster. You're still above that 72.85 barrier. But momentum's still giving us divergence and still holding that 40 region. Now, to be clear, okay, just to look back in price, the momentum signature here remains bearish, okay? And from a scalp standpoint, yes, this would complete a 5-day decline here again today. We bring up the consecutive bars indicators just to take an idea of when's last time we saw 5-day declines. That would be here. Scroll back. It was right here. Okay. Where was it? Right here. And that was right as we preceded a major low. Again, that charged a nice little rebound in price. That actually took us right into, not the yearly highs, but pretty close to the yearly highs for 2013. Okay. So that would this is sort of the scenario that you would look for, or this is sort of an example you look for if we clear, or based on the fact that we haven't closed today's candle. If we do 5 days, okay, this candle, that's actually the low that we caught for the year. That's 2013 low. So just some examples of where we could be near term. Again, this is not going to be a major support barrier for us, but we continue to stay below this median line on a closed basis. Bring it into a line chart just to give you some clarity on that. This is sort of the level, again, where we caught support last week. This is the level, again, that we would need to clear, sort of give us a topside objective. So I've been targeting Kiwi longs. I've been trying to get on the long side of the Kiwi. Here's what we looked like yesterday. As we were publishing the intraday charts, we were coming right into this resistance region. This did shift the focus to the upside. Again, some slight, I didn't even get some divergence here, but a trigger break to the upside. This was also a break of the Asia Pac opening range high. And again, initial target was 73.27, then the upper median line parallel. It didn't quite make it to the upper median line before this thing turned over ahead of 60. Again, a perfect example of momentum signature that is bearish since the start of the week. We don't get formations that are this clean quite this often. So I hope you guys were able to take advantage of this earlier in the week. The last short we took was into 73.20 right here. Haven't really done anything with this since. And again, I just wanted to point out that on the pullback here, see how we're holding 40? On a pullback scenario here, when you hold 40 momentum, the 60 break is all the more conviction that you're seeing some sort of reversal in near-term momentum. So we'll be looking to see if that top trigger, is accompanied with anything compelling in price. And again, you need to get above. We'll reduce or we'll drop the bearish invalidation level to this for now, near term. We get back above this, look to target those New York highs from yesterday at 73.50. So unlike the Aussie, this one I think you still kind of need to give it a little bit more. It might chop around here for a little bit more. The ATR has been contracting slightly, so even if you do take any scalps on this, guys, 24, 23, 25 pips should suffice until we get the breakout. If we get the topside break, again, we're looking towards 73.80, 74.20. The 72.84 break, if this gives out, and this is the bullish invalidation level, you look for a drop into the median line parallel, you look for 72.70. And again, the 88.6s on the Kiwi, on the Aussie, tend to play pretty well. So heading into the New York Open, this is your focus right now. 73.27 on the upside, 72.80 on support. Questions on Kiwi? Okay, so those are the featured scalp setups on the intraday page. I do want to just really quickly touch base on gold. There's not much here in my mind until tomorrow. We'll want to see what the we'll want to see what those inflation numbers look like. Remember, the typical plays for gold are a hedge against inflationary pressures, historically speaking, and a safe haven bet during times of turmoil, market sell-offs, uncertainty, yada, yada. So we already know that necessarily we're not seeing anything in the market that's freaking anyone out just yet. But certainly the inflation picture has been lackluster in the United States. And if the inflation picture comes out much stronger than expected tomorrow, you would expect to see the dollar start to show some more strength. And you expect gold to possibly come off. Why? Well, inflation is the only thing that the Fed's waiting for. And if inflation starts to really ramp up, what does that suggest? Well, suggests that the road to policy normalization and higher rates is probably going to be closer rather than farther. You guys have heard me say it a million times. I'm not really a believer that the Fed's going to move on rates this year. That's just my personal opinion. If anything, it might be December, but with global central banks just ramping up QE and strength in the dollar is only going to be further exacerbated with an interest rate hike. I really think their hands are tied right now. They're between a rock and a hard place. Long story short, we're not going to sit here and discuss the fundies all day, but something to keep in mind. So with that, gold tomorrow is going to be an interesting play for me. Remember, the bullish invalidation level for the broader uptrend, or at least the monthly opening range, is 1200. And 1200 is the simple objective May opening range high. It's also the close lows for February, and a decent pivot in price back here even in December. Okay, so that comes in right around 1200. Might be ahead of target here as far as time. We were highlighting this earlier in the week, followed by the lower median line parallel. All right, but objectively, guys, as long as we close above 1200, the monthly opening range strategy suggests that we stay constructive. This offers a good trigger as well, because on the way down, look what momentum's doing. You got a 4-point trigger touch there off the lows. Let me adjust that again. Sorry about that. Okay, and that coincides with the 50 region. So you can see a scenario, if we break below the median line, momentum breaks below 50, that would be a clear trigger reversal play. If this holds, even if we probe down here today, and this holds on a closed basis, remember, any oscillator you look at is only based on the close of that candle. If this holds into the close, well then, you don't want to really be on the short side of the trade. That's the type of scenario where you would start to look for a low, start to look for long triggers against that trend line. Khan saying, so basically you will wait to see to price action at support for Euro, Aussie, and Kiwi. Do we receive your confirmation for scalp trades? Khan, welcome aboard SB Trade Desk. We don't give trade guidance for scalp by scalp basis. Just as a disclaimer for everyone in the room, you know, we're in and out of these positions on a very short-term policy, on a very short-term time frame. Also, I like to fade out of those positions. A lot of times I'll take a quarter off, a third off, add some on the dip. It's just, you know, me trying to tweet that is just a disaster for people starting to chase. And that's the last thing I want to do, right? My goal is to keep you guys on the right side of the market, to highlight the invalidation levels, to highlight the scalp targets. I'd rather you come to these sessions and kind of learn how we do this. Teach a guy to fish, will never go hungry again, you know that saying. And, you know, every morning we'll go over the targets and the invalidation levels for any trades that you like, Khan. So, again, welcome aboard, and feel free to throw out any questions that you have, man. It's great to see you in the room. Stefan says, yeah, notifications will cause you to chase, exclamation 3 times. Yeah, I hear you. Trust me, we've thought it out, and I've tried it, guys, in other services. It's very difficult on a near-term strategy, trade-by-trade basis. But, you know, I'll try to keep you updated on SB Squawk for sure. So that's the gold trade. All right, I see some great pairs, some great questions you guys are looking at. So let me jump into those. First question was on sterling yen from Stefan. Hey, man, this is just a phenomenal breakout here. Okay, the data was exactly what we wanted to see. Even yesterday's close was right at the invalidation level that we talked about in the webinar. You see this circle? Median line resistance, 786 extension off the low. Not really stressing it, but that 786 comes in right at the stretch highs for the month. So why not? 88.50 was the level that we were watching at. That's where we closed. Got a quick pullback right into 88 on the overnight session before we plowed right through. Momentum is now in overbought condition. That's not where we want to start necessarily fighting the trade. The next target I have, you have the R2 monthly pivot, which is within this highlighted region. If you're thinking to yourself, this is a big region, Mike, you're talking about 90 pips here. What are you looking at? Guys, it puts in 172 pips a day. So on a trade like that, we'll give ourselves a little bit more of ranging resistance and support. That being said, the range is littered with stuff. You're looking at the December highs from last year, so that's a yearly high in play. You're looking at the R2 monthly pivot. You guys know I'm not really huge on pivots, but certainly when they coincide with trendline support, trendline resistance, major Fibonacci levels, you know, longer term moving averages, it tends to be a lot more technically significant in my mind. So the R1 comes in right at today's highs. You're basically looking at the 190 handle. 190.50 completes 2 equal legs off the low. And that's going to be the 100% extension. So uptrend at resistance is pretty much all you can say here on sterling yen, Stefan. Okay? You could get a little bit of a mean snapback here if the sterling corrects, but the broader trade remains constructive above 188, okay, which is today's low. Also keep in mind, objectively speaking, you know, we had a long discussion earlier in the week about opening ranges and how we can use that to our advantage. And someone here in the room asked, hey, do you use opening ranges on a yearly basis too? This is a perfect example of how we can do that. Here's the January open. You set a low. You try to test the highs. You basically filled that gap, moved right off to test the lows, failed, test the highs, get a little bit of a snapback, right? And then we plow right through the highs of the year. Come back, check it as support. Doesn't last very long, moving higher. So objectively speaking, if I were just to use that as a standalone strategy, which I never do, but let's say for argument's sake you do, you know, you stay constructive for the year, or you stay constructive moving forward on a monthly basis above 86. So from a lot of different standpoints, you look to stay constructive on sterling yen, even from the momentum standpoint. You know, you got a couple of probes below 40. I get that. Markets aren't a vacuum. You're going to get, you know, these types of things that sort of switch your bias. You got a 40 break here. It held 60. But then on the way back, 40 held again as support back in overbought condition. So the momentum profile remains constructive for sterling yen. Questions on sterling yen from a daily standpoint. We'll look at the scalp in just a moment here, Stefan. Now that the daily is overbought, should we stay away from the trade and look for a turnaround about the 100% extension? This is where I would look for a near-term resistance on a scalp basis. If there are long triggers, okay, at compelling risk to reward, I have no problem with getting on the long side of the trade. If it's an overbought condition on the daily chart, Stefan, that's what I want to be doing, right? The problem is that everyone has this misconception. Oh, it's overbought. I got to look to fade this. I want to be on the short side. Things can stay overbought for an indefinite time period. You're trying to fight the trade because it's overbought, but it could stay overbought there for 4 days. So you're going to be fighting a downtrend. You're going to be fighting a real strong uptrend for 4 days. Remember, the fact that this gets up here, that's when the market has the biggest push. There's a lot of push behind it, right? And in my mind, guys, the fact that this is up here right after a clear-cut perfect 40 bounce doesn't get much more constructive than that, okay? So let's try to step away from the stigma of some of these indicators and kind of stick with what the market is doing with them, what price action tells us these moves are doing. So to answer your question, I wouldn't necessarily be scared, Stefan, of buying on the long, buying a trade that's overbought in the daily. I get concerned buying an overbought on the 30-minute or the near term. Okay, and why is that? Well, I'm never going to advocate, guys, that you buy anywhere near the highs of the week. You know, if we pull back and you get a decent low for the opening range, you have a median line or a major key level to trade against, sure, it's a scalp. You're only looking for 43 pips, which is a little bit bigger than typical, but it's a bigger range trade. Sure, there's nothing wrong with that. But you're not going to get any momentum triggers up here, right? So what are you even using to get into the trade? And then even if you do, where the heck is your stop? I mean, there's nothing here compelling enough for me to put a stop. If anything, I'd want to put it against the opening range high for the week, maybe against, the median line. But even that, I'm looking at an 80 pip stretch. I'm not going to take an 80 pip stop on a 43 target. So where we are, yeah, I don't necessarily have a move from right here. I can tell you that, definitely the 100% extension is what I'm looking for as the next upside target into that 190.50 level. I'd be more compelled on this one, Stefan, to buy the pullback and look for a topside trigger and momentum. Again, maybe if we pull back into 89, maybe if we pull back into these highs, that would be a great play. If we get a turnaround signal, let's say we do get a momentum trigger to the downside, instead of playing this short, I'll be looking to target along. Just use the weekly range. Again, I can't take this fib right now because I have no validation this is a high. We could blast right through this in the US trade. But just as an example, if we were to get a downside break of 70 or an opening range break to the downside, these are the targets I'd be looking at. 50% comes in at the lows for Europe. 236 comes in right at that 89 handle we just talked about. All right. So absolutely. A beautiful trade. And again, I think there's plenty of upside here if you're talking about a longer term setup, guys. Here's what sterling yen, by the way, looks like on the weekly charts. Again, if you're subscribed to the mailing list, my mailing list on Daily FX, you saw this in January on the trades of the year forecasts. The initial game plan to open up 2015 was to look for a pullback to get on the long side. Now, truth be told, we did break that long-standing multi-year trendline support. That lasted only a week before we recovered right above. Momentum slipped below 50 and recovered real quick. On the recovery, even on a weekly chart, that was a clear trigger. Okay? That was a clear trigger. So here's the opening range high for the year. We're clearing that now. The resistance range that caught the highs for the 2014 rally, and again, this was the trade of the year for 2014 as well, actually, was 88.27. That's a 618 extension off the low. All right, so we're breaking through that now. I do want to just point out the median line off of the lows, okay, that caught the high for 2014 on the open. That median line comes in right around 90.50. Look to the right. Look where that 100 is. 90.50. Okay, so guys, it's a beautiful trade from a scalping standpoint. You're at a very interesting level. I really wouldn't touch it necessarily at this range, but from the daily chart, from even a longer term swing perspective, this is why it's on the radar for Jamie. This is why we highlighted it in today's or on the homepage with the charts. So keep that in mind. Stefan, does that help? That is definitely a misconception of mine regarding the daily chart as well. Great clarification, says Stefan. I appreciate that, man. I'm glad that this helps. Hey, Ty, great to see you in the room again. He says, hey, Mike, what are we looking for to operate on the session opening range today? Simply a momentum trigger close to a session high or low? Yeah, that's always going to be the game plan, Ty, every day, right? Stefan says that helps. I appreciate that. Emil in the room says, I took 152 pip gain on sterling yen today. This is where I'd be looking to clean some up. Yeah, right on, Emil. I mean, you waited for the exact range I was looking for. So 100%, I'm with you on that. I don't necessarily think, again, the top side is done here, but there ain't nothing wrong with taking some off at resistance, and you are indeed at resistance. So you can get a stretch higher into 90.53, but a breakout from this level really puts the continuation trade back into play. We're going to raise our bullish, invalidation level. We're going to raise that to here on the R1, and near-term support is still going to be the same range that we were looking at as resistance to open up the week. So 188 near-term support, basically 186.70, right above that R1 is what we'll reserve near-term as our bullish invalidation level. Okay. So Ty, if there's a specific pair that you want to look at, I'll be more than happy to bring up the 5-minute chart and see if there's any triggers or what levels we're looking at to open up the session. But the same levels that are highlighted here on the intraday page, these are going to be the same levels we're looking at. And ideally, you get an opening range right off one of these levels with a trigger break on a break of the opening range. That puts us into the trade. It's not always going to be an opening range trade setup, though, guys. So one thing I do want to talk about. In the webinars here, I try to highlight the opening range as we head into the session, but that's not always going to be the tell. And a lot of times you get that, and as I said earlier, you get that European close, and that move is always, for the last couple of days has been very telling for me. So if it looks to recover some of the range that you're putting in on the U.S. Open, you use that rally to get on the short side. If it looks to extend into the range, so as the European market is closing, for example, you get sterling traveling higher, those aren't going to be the ones that are going to be the easiest plays. So it really depends on how we close Europe today. Also keep in mind, you're heading to the major event risk for the week, Ty, tomorrow, right? So volatility might start to stretch out a little bit and start to die out as you head into the Asia session. And again, here's the scalp chart that we were looking at for sterling yen yesterday. It's interesting because that low that we just eyed as a soft target at 86, it came way ahead of target in time, right? But it was the exact high for the May opening range. Here's the May open, or not the May opening range. I'm sorry, that's the May 8th high. This is after we broke the opening range. Almost the exact low. All right, that is sterling yen. Sandy says, Euro, I took 40 pips. Nice. Only cable is running. Dollar yen stopped out. Sterling yen, Euro yen, though. So sterling yen we just went over. Sandy, let me know if you have any questions on that. I do want to just take a brief look at dollar yen, and then we'll look at sterling yen, okay? Or Euro yen, rather. So dollar yen, you guys know how I feel about this pair, but nonetheless, the levels continue to play out pretty clean. The high that we made yesterday was right at the close highs that we made for March, and that came in at 121.43. The high yesterday, 121.47. Okay, median line there also off the lows from March. Not the cleanest. Okay, even on a closed basis, we probed through it. Momentum probed through 60. I just don't see a point in trading this myself, guys. It's got a 75 pip daily ATR, so you're basically looking for like less than 20 pips per scalp. Lackluster, right? It's not going to be our favorite setup. So you could see some pullback on the dollar yen. That's yen strength. Might curb some of the appetite for some of the yen weakness that we saw near term. Major key breakout, if you get a move surpassing 121.83, which is basically the December highs. What I have is just basically the yearly high for 2014. You look for a run up into the upper median line parallels right here. bullish invalidation. If this trend line break is really just, a fake out, bullish invalidation, oops, already got it highlighted, is right here. And again, on this trade, objectively, what we did here on Monday or Tuesday was an opening range break for the month. Here's your open, you test the high, you test the low, again you test the high, it fails, again you test the low, it fails, break through the highs, put your bullish against the lows, looking for a late month high. See if we can get it here in dollar yen. As a disclaimer, historically or over the years, in my experience, one of the worst players with the opening range strategy is the yen. So I don't really want to stress that, but objectively speaking, guys, that's one way you can interpret price action on the near term. All right, so a pullback here, that would be some yen strength. Euro, if it breaks down further from here, Sandy's my problem, that would be a really nice trade for the downside. But if euro holds, now you're talking about yen strength and euro, or yen strength and euro strength, which might not give us much on a near-term prospect. So the pair has been kind of sitting on this trend line off of the lows for the month. It's an expanding range, which are typically not my favorite plays either, meaning you're making a higher high, and then the slope is actually opening up with resistance. So the range is getting larger on every swing. Tend to be tough plays for me. But in any event, the weekly range or the weekly chart looks like this. So if you take a slope line off the lows for March and you match it to the low that you made there in April, this is sort of the median line I've been working off of on the real near term, and that highlights last week's low as 133.50, 133.47. That coincides very nicely with the median line heading into tomorrow's session. I interpreted this, we talked about this yesterday, as a break of the weekly opening range, whether it was actually a well-defined range or not. It was a break of key support and a decent, simple trend line. No pitchforks, nothing fancy, resistance, 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 break, instant support, break, should offer some resistance, and you stay bearish below 135.80 near term. I do like the short side of the trade on this one, Sandy. The only thing I don't like about the euro yen is the yen. Okay, so that's sort of where my contention is on this pair. We are looking lower. The momentum signature remains bearish. Yeah, you started over 60, but you got a real deep penetration here. And if this 60 holds resistance, it brings into focus this trigger here. Or in fact, I might be wrong. Where's the low in price? Okay, so I'm going to use this as the low in price. And as it pertains to the triggers, it's always going to be in your best interest to use that as the reference point. All right. So if you see a downside break here, and specifically if it clears 60 in momentum, or 40 support and momentum, looking for a drop into about 33.50 here. It's going to be hard to justify getting into a short from this unless you get a rebound. You can get it close to that high is where you want the stop to be, and then the trigger breaks would sort of be ideal. Other than that, you're already you're already 50 pips off from the high, so I really can't advocate a short from here. See if you can get a bounce here, allow you to get back in. But broader trade, in my opinion, again, we're going to bring the bearish invalidation level to this region here, former trendline support, and also this nice pivot in price. Remember, we highlighted this yesterday in the webinar, guys. I didn't touch this. This is from yesterday in the webinar. We were looking for this rally to give us a short entry. We were off on time, but again, in price, it's exactly what we caught the highs. So we could move off from here. Remember the daily chart. This is sort of the trend line we want to see break. And that is this basic trend line here. All right. Sandy, hope that helps on euro yen. Interesting trade we've been watching a lot last couple of days. I put out a piece on this on Daily FX last week. So all those levels pretty much still in play. We made some adjustments, but if you need, again, any of these levels for your own reference, feel free to take that snapshots. GoToWebinar software is awesome like that. Much more effective than live stream. There you go. Okay, so we did dollar yen, euro yen, sterling yen. Oh, sterling CAD. Almost forgot. Here's what sterling CAD looks like, guys. We've got about 4 minutes left to go. So here's a quick look at that daily chart. Another trade we've been watching. Oh, that's euro CAD. Another trade that we were watching to start off the week, remember, 90.43, 90.20, nice tight range. Another pair that gives us a nice healthy ATR of 182 pips on the daily average. Huge range. Not for the faint of heart. If you're newer to the strategy, this is something you want to wait a little bit on. These bigger ATR trades, the implications of a wrong scalp obviously are going to be larger. So I just want to put that as a disclaimer out there. But, geez, I mean, what a breakout. The initial target on the breakout was the upper median line parallel. That came in about 91.30. We sailed right through that, 91.90, 91.87 near the highs. Next topside target is the 50% retracement. And this is a multi-year retracement off of the highs from 2007, okay, crisis highs. So that 50% retracement also coming in very nicely with the highs that you made for 2009. That spike high was right into the 92 handle. I think it was like 92.80. Something like that. 92.90. Okay. And that's the region that we're looking at as near-term resistance on this breakout. Okay. Today's close is going to be huge. We've seen a couple of spikes through this upper median line parallel. So if it holds, in fact, I think we could probably adjust this. Okay, what we're trying to do is get as many touch points as possible. You don't want to try to fit analysis to price action, but if we're seeing clear conviction, and this is resistance, resistance, pullback, just missed that on the top side, resistance, pullback, right on that. Here we go again. Today's close will be paramount, guys. This is basically the resistance region that you want to keep a dead eye on for the top side for sterling CAD. And this is why on a stretch like this, who was asking this earlier in the morning? Stefan, on a stretch like this, you start to get a little concerned trying to take a long scalp, even intraday, into resistance, because it could be just an emotional spike into that region and a pullback. So I'd rather either wait for a break above 92 to buy the pullbacks or wait for a pullback to try to get a low to trade against for the intraday. But really compelling. You stay constructive above 190, period. This is going to remain. This was the bullish, or the bearish rather, invalidation level. Now it's going to be the bullish invalidation level. And you look to stay constructive, again, well above 190. Also, the momentum signature, we talked about that on the pullbacks here. 40 holding support. This is the first 60 break that we've seen since back here. And that 60 break obviously charged a major rally into the yearly highs. So another one, sterling, really nice moves. Objectively, we were looking at this again in the webinar yesterday, and someone was asking about this specifically. And we said, look, at the end of the day, it's a simple opening range for the week. You set a low, you set a high on Monday, Tuesday. You've been playing within that range for the last 4 days or 3 days. Here's a Thursday break of the highs, constructive against the lows. Looking to play the top side there. All right, so sterling CAD, another very interesting pair. Again, feel free to take a snapshot of the chart if you need it. Bill wants to take a look at dollar CAD. We'll take a quick glance at that and we'll call it a day. Here's what dollar CAD looks like on the daily. Remember on this one, Bill, still the same level that we talked about yesterday, 122.68, 122.70, still the resistance I'm looking for dollar CAD. It's the opening range high at 122.20, and the fact that we closed above it yesterday, we closed right there. We closed at 122.05, and doesn't really give me much conviction on using that strategy here on dollar CAD. If this is a reversal, I want to see 50 break in momentum and a move above this region in price. I think you can get up in 23.80 in that case, maybe even 24 handle, and then we'd look to reassert the short side. That being said, near term, you have to be mindful of that median line. It's just been too clean to ignore. So even from here, Bill, if you get a pullback into this region, it's kind of start of where you want to look for some support. On the intraday, we added this pitchfork yesterday with not too much conviction, and again, I don't really want to use that as an operative play just right now per se. Getting kind of messy, but again, either way you look at it, it really highlights that 122.70 region as near-term resistance. Okay, there's that median line offering some support. Just as a quick reference, again, we don't have validation that this is a major high. I'm just doing this as a drill here. Just want to see something. Yeah, looks pretty good. And if you draw that right off the lows, whoops, Terry, if we take that retracement right off the lows, my man, if I can get the low, there it is. It highlights this region here again. So same median line that we were looking at as resistance on the way up last week, break, offered support on the way down. That's going to be the near-term support that we need to, I'm sorry, this was this week, earlier in the week. This is going to be what invalidates the long side. It's also a basic 236 of the advance. A break below that, again, you look for 122.20 median line support. I know this looks a little messy here, guys, so let me actually clean this up real quick. And again, the momentum signature on this pair, sorry about that, guys, I was looking at this. The momentum signature on this pair, very interesting as well, right? Lots of holds above 70. That's an uptrend, clear and simple. Pullback 40, pullback 40, back above 60. So, you know, still could get that stretch higher into that key region we talked about before this thing turns over. Daniel, Sandy says, thanks, Mike. Hey, more than welcome. Jay says, Sterling CAD, what is the 50% fib on the daily? Thanks. Sterling CAD, 50% on the daily. This 50%? We went over that. This is from all the way back from the 2007 high. Let me get it for you. Yes, 2007 high into the lows that he made for 2010. Jay, you got that? Okay, and also right above that is going to be the 2009 high. So keep that in mind as well. He says, yes, thanks. Hey, more than welcome. Bill says, thanks. Bill, I appreciate that. Irakli, I'm sorry. Great to see you in the room, and welcome to SB, man. I saw you come in yesterday. He says, hi again. I'm new here. Interested if can get this dollar CAD chart on your website. Again, I want you to feel free to take as many snapshots as you want, guys, because here's the thing. We go over so many pairs here. I can't possibly update every pair, guys, on the site every day. So these sessions are here for your benefit, guys. Make sure if there's any pair that we discuss or if there's an off-cuff question that comes from someone, that you guys feel free to take any snapshots that you need. So Irakli, sorry, you have a camera button in the top right-hand corner of your GoToWebinar. It might be on the left. But if you click on that, it'll actually take a picture of anything you see here on the screen, and you can keep it for your reference. But I'll try to throw this up for you on the site today, all right? If anything, I'll at least give you the SB squawk with the chart. Daniel says, good session. It's nice to be part of the only relevant analysis out there. Daniel, I appreciate the comments. And guys, your feedback, as I always say, is invaluable to us. And I've been getting a lot of feedback from all of you, so I really do appreciate it. We're looking to implement that into the service as always, and it's always invaluable for us to know what kind of things you guys are looking at, what more we can do. Eileen says, thanks for the extra time. Have a great long weekend with Memorial Day. See you next week. Irakli says, thanks. I got the screenshot, smiley face right on. And again, welcome aboard. Bill says, yes, the only one. Appreciate all your comments, guys. Don't go anywhere. At 1 o'clock today, Jamie Setley is going to take the mic for the midweek strategy session. Guys, we typically have those on Wednesday, but in lieu of the release of the minutes and where we are price, it just felt right better for him to get it out on Thursday here today. So stay tuned for that at 1 p.m. Till then, best of luck trading. Kyle says, my first day, first session. Thanks for the great session. I appreciate that. And Ty, your comments are always appreciated, sir. I will see you guys all on Tuesday for the next intraday strategy webinar. Till then, have a great, blessed weekend. Stay safe and happy trading. Cheers.